Good morning, everyone. This is Lennox Capital. I am Brandon Boykins, along with Evan Dyer here from Lennox Capital. You might be asking, who's Lennox Capital? We are a real estate investment firm based here in Austin, Texas. And today we wanted to give you a small introduction of who we are, what we do, and what we'll be focusing on moving forward in 2023 onto 2024. So who is Lennox Capital Group? Lennox Capital Group is a small boutique real estate investment firm focusing on income producing assets, delivering long-term value to our partners and our investors. What we do is focus on value-add multifamily opportunities in three specific markets, which we'll get into in the later slide. But we have three specific markets within the state of Texas, targeting investments with high yield passive cash flow and long-term capital appreciation. So focusing on those aspects, we are both passionate about building an exceptional real estate investment company that provides consistent return to our investors, but also being experts in our target markets. So I'm Brandon Boykins. A little bit about myself. I'm originally from Tampa, Florida. I went to school for business and IT. I also played sports back in high school. I played football, ran track. I was also in the spelling bee, and I relocated to Austin, focusing on technology. And in the period of doing technology, I grew up around real estate. My family were into real estate, were real estate investors, and I came to Austin with that real estate experience and decided to create a painting company. I created a painting company, scaled that over to doing real estate development. But I always knew that multifamily real estate was where I wanted to be. I started learning about multifamily real estate back in 2017 when I was back in school. So I waited to an opportunity to come to Austin in 2020 to finally get my feet wet in it. And from there, I started to do an infill residential development. And, Evan and I have partnered up to go after multifamily, specifically Class C multifamily in the three markets that we referred to, or will be referring to in the future.
Hey guys, I'm Evan Dyer. Originally from New York, but I've been essentially grown up here in Austin, Texas, with my family moving down when I was a young kid. Went to school back up in New York as well, St. John's, go Johnnies. I got my degree in international business, and have always been fascinated with the real estate just in general, mainly with my dad as well as a few of my other family members on that side, buying mainly residential and small multifamily, and just seeing what they've done over the years and seeing how they've been able to scale it even just on a small end. It's something that I've always looked up to. Currently I'm doing sales in the tech space, but as of recent, partnered up with Brandon, and we're looking to scale multifamily. I currently also have an 8-unit property in the South Texas region, and that will kind of make sense later on when we explain the type of markets we're looking into. Yeah, so why multifamily? Starting with stability. It's a stable asset. It's a safe asset at that. It's something, people always need somewhere to live. And regardless of the economic, whether it's economic prosperity or economic downturn, people always need somewhere to live, always need a roof over their head. So that's, something that's attractive to us and why we're choosing multifamily. Second is the cash flow. With most people, you're getting consistent check every month because people are going to have to pay rent regardless, in order to stay with a roof over their head. And then compared to, going back to single family, the scalability is there with multifamily. Single family, if, you have one tenant, and if that tenant leaves, you're now 100% vacant, right? But with multifamily, one person could leave, and, hopefully you have the rest of your units occupied, and therefore you still have cash flow and money being generated month over month. And just to follow that up again with lowered risk, again, whether that we're in a recession or whether the economy is very healthy, buildings will stay filled up mainly because people, you can't live on the streets. People need a house or apartment or somewhere to live just in general. And just to finish up the tax benefits, which, there's a whole lot of tax benefits that come with multifamily, but, one that comes to mind is the fact that you can utilize depreciation just to offset a significant portion of your rental income. So, I don't think anyone personally likes to pay taxes. So multifamily is a great tool to kind of, help offset that.
Awesome. So a little bit about our investment criteria. Like I referenced to you in the first two tabs, like Evan and I referenced to you in the first two tabs. We preferably, we are starting smaller with the 1.5 to $10 million purchase price range. Again, we're focused on Class C multifamily assets across 3 different markets. So, those are going to be your, 1900 bills, nothing really in the 2000s. So, in that price range, that's around 10 to 20 to 100 units. So we're focusing on those markets, and I'll let Evan go into the specific markets we're looking into.
Yeah, of course. Yeah. So, as of right now, our 3 major markets we're focusing on are Austin, San Antonio, McAllen. Why those markets? Well, Austin is our backyard. And, as you can see, Austin's a very popular place to be right now. Essentially a top 10 city in America right now to be. Lots of large businesses moving here, as well as a lot of young people. And, if you look at the overview of just housing in general, most young people aren't able to buy houses at this time, right? So what do? They go get their first apartment, second apartment, whatever you want to call it, as well as even just single people in general. People, don't necessarily need a ton of space all the time. And, that's why those apartments get filled up. And with all those businesses moving there, it's attracting a lot of demand and a lot of employment. Is moving down here. So that's number 1 for Austin. With San Antonio, it's essentially similar to Austin. It's only about an hour away. That's somewhere we could drive within, again, an hour. And it's a booming market as well. Anything between Austin and San Antonio is green for us. So very excited for those 2 cities and where they'll be in the next, call it 5 to 10 years. And kind of referencing back to what I said earlier about South Texas, McAllen. Well, I know a lot of people are hesitant with the border towns, but that's something I'm bullish on, mainly due to I have family down there. So I visit there frequently, as well as it's just a booming market as well. A lot of transportation companies go in and out of McAllen, and it's a big business city. Again, I have an 8-unit that I explained earlier that I own that is in South Texas as well. So I'm very familiar with the market and, have very confident in where the city will be in the coming years.
Awesome. Thank you for that, Evan.
Yeah.
Now, and again, this was just a short preview about us. There's a lot more here. We'll be making more videos about what we do, why we chose those markets, and the more in-depth analysis. We also will be making other videos about how we underwrite our deals, how we source our deals, and how we like to structure our deals with our investors, with our partners, and how we source our debt as well. So stay tuned for those videos. But if you're looking to get in touch with us, these are the main outlets for us. Our website is www.lennoxcapgroup.com. These are my socials. These are Evan's socials. You can find us on either one of those. Feel free to reach out to us if you're interested in partnering up with us on a deal. Feel free to reach out to us if you're interested in investing in one of our deals. Feel free to reach out to us if you have a deal that you think we might be interested in taking down on our own, right? If you're a broker or maybe you want an assignment fee, don't hesitate. We will look at any and every deal in our respective markets. We are looking to do deals at a hyper level going into this year and into the next year as well. So definitely reach out any way you can. Email, LinkedIn, Twitter, as we know today, as yesterday, Threads, whatever you're comfortable doing, please reach out to us. And thank you for tuning in today, and we appreciate it, and hope everyone has a good rest of their day.